All right, ladies and gents, you could take a second to breathe because it looks like for now, many of our key problems have been resolved. Bitcoin is literally just coiling up inside of an incredibly bullish potential breakout pattern here, getting ready to attack its most important macro resistance level, honestly, since the dump here. And a lot of other coins have already led the way. Solana has pumped out of its equivalent consolidation pattern. So too has, of course, Ethereum, and Ethereum against Bitcoin has also made a complete recovery now on its alt BTC pair, and we're actually seeing that across the board. Solana BTC now back up to pre-dump levels. Cardano BTC now nearly back up to pre-dump levels. Binance coin already recovered a lot of it and has slightly slid down since then. So we are seeing some variability here, but Bitcoin's dominance tells us the story clearer than anything else. Alts have regained their strength, which means that as far as this kind of temporary blip for altcoins go, which unfortunately, despite how crazy it was, it is just a blip now. It's actually more of a fortunate thing. We are now effectively quite well reset for this market, but it gets a lot better than that, ladies and gents. There's more good news. The S&P 500, as predicted, if you guys were watching our YouTube videos, our live streams here, you're going to know that literally within minutes of the dump starting on Friday, we had the full read on everything. We told you on live that Donald Trump announced this tariff situation right after US markets closed to limit the effects on markets. We understood through this YouTube channel, because nobody else really got this. Everyone's saying manipulation and Trump's a bad guy and, you know, the exchanges are fucking us. But the reality, ladies and gents, is that crypto is over leveraged. Anything would have sent them tumbling. It happened to be Trump because Trump caused the panic last time with tariffs earlier this year. If it worked last time, it was bound to work again. But the markets just chose whatever they could to run with an excuse to dump. And as soon as that dump starts, you can't stop it because now you're triggering liquidations. Really, really important stuff. And despite all of that, pretty much a full U-turn here. I mean, you know, if we take a look at the S&P 500, it gapped up massively here. I mean, an incredible gap right here, a 1.2% gap, which is really, really nice to see, followed by continued upside here on the S&P 500 with just about an hour left at the time of recording this video until the S&P closes for today, and we've seen a phenomenal recovery, not only for the S&P 500, but gold as well, continuing to rally up throughout the start of this week as well, which is absolutely fantastic, ladies and gents. We're seeing upward movement on everything. The reason we haven't seen it on Bitcoin, from what I can tell, is simply that Bitcoin just needs to coil up a little bit more. It's giving other altcoins a really nice chance to play catch up. Here's XRP, by the way, also against the dollar, pretty much recovering back up to pre-dump levels as well, which means that we're getting all of the right signs here to tell us that this market is healthy. Now, as far as Bitcoin in the immediate short term, the fact that we've consolidated under this resistance now makes it a lot more likely that we break through it, in my opinion. Now, does that mean that we can't get a little rejection? No, we could still get a rejection, and I'd love to see one because it gives us a chance to backtest this level where we've kind of got a little bit of potential resistance. It gives us a chance to flip that into support and then break up higher. But in any case, it looks like we're poised to go higher because traditional finance wants to go higher. Of course, I do have to flash the disclaimer on screen because I do want you guys to be cognizant of the risks that still exist in these markets. But I think that we are looking like we're in a pretty good stance because of that. Because if we didn't consolidate under resistance, then what I would have to tell you is that when Bitcoin does get up to this resistance level, we might have to see a rejection so that the market can correct and then move up. We just had the correction happen before we hit the level, which I'm totally fine with. Bitcoin peaked at about 116,000, which puts it within the range of resistance anyway. And so the fact that we're stopping here tells me that we're responding to resistance in a healthy way. And if we do manage to get that breakout continuing on as a result of S&P 500 strength, then ladies and gents, I think we're going to be in a very, very good place for this market. Now, I do want to bring your attention over to this article right here. Stock buyers power best S&P 500 rally since August markets wrap. This is a really interesting article here from Bloomberg. We're going to integrate a few more of these in the videos. Let me know if you want me to do this. You know, usually I don't, but it's interesting because they cover things that I don't always cover. I don't think that they're super important. That's why I don't cover them. But I know that some of you guys might be interested, and more importantly, you might be interested in my thoughts on the extra stuff that they cover as well. If this is something you want to keep on seeing, smash up those likes, double check that you are subscribed. Thank you for all the love recently, ladies and gents. As you already know, we are going live every time there's a volatility event here on Bitcoin. So if you don't have that notification bell checked, then do that now so that you do get notified of our videos. You can also gain access to updates on our live streams inside of the free 4Flies Gold Telegram channel, which is in the description right here. Check that out, as well as some phenomenal links to some of the best exchanges in the game, where when you do start trading using these links, you're going to get tons of free cash deposited into your account. So check them out if you're not from a restricted region. But coming back to this article here, Wall Street traders lifted stocks as the US and China signaled willingness to keep trade negotiations alive, and Middle East tensions cooled while the artificial intelligence rally powered ahead. That's basically a really nice kind of synopsis of everything that did happen literally over the last day or two. Because, as you may or may not have heard of, the Israel-Gaza war seems to kind of be wrapping up here. It looks like the hostages have been exchanged and everything happened peacefully, which is fantastic. That's the best case scenario, ladies and gents. Doesn't matter which side of the aisle you're on. For this one, war is over. Now, you might not like what's happening moving forward. That's totally understandable. But at least the killing is done. So, honestly, that deserves, a little bit of appreciation. I'm very, very glad to see that because it was absolutely horrific. And now that that's out of the way, we've got one less reason to be worried about the markets. We've got one more reason to be speculating on the markets, and that's not me saying this. This has been proven by the numbers. Now, that's absolutely amazing. It's great to see that that war has cooled and, tensions have cooled in this sense, and that the US and China are looking to cooperate with each other. So, could this get worse again? Hell yeah, it could. Absolutely. It's Donald Trump we're talking about. But I think we're in a very, very good posture. You're never going to get perfect stability with Donald Trump. That's not necessarily what we're going for anyway, because volatility is good for us as traders. Might not be good in other cases, but we're just talking about trading here on this channel, and it's good for us in that case. And as a result of that, if we're opening up the kind of, gateways to start speculating again, and we're removing reasons for people to be worried again, then that's a lot of sidelined cash that can start coming into the markets here. And especially for crypto, seeing that kind of full reset, I do think is very, very powerful. Let's carry on here. Following its worst rout in 6 months, that's going to be since that, March-April crash from the previous tariff drama this year, the S&P 500 jumped about 1.5% to extend a bull market that's already added $28 trillion to its value. The benchmark saw its best session since August. A key gauge of chip makers surged 5%. Broadcom Incorporated soared 10% as OpenAI agreed to buy its custom chips and networking equipment in a multi-year agreement. We got things moving, ladies and gents. There's no slowdown happening in the AI world. I think it's very silly. We're not slowing down in that world for a while. There's a lot of people who, think that they kind of got their head around it and that, the world's just going to adapt to AI and stuff like that. No, it fucking won't. Mark my words, it won't. This is something that nobody's prepared for because nobody's going to be useful anymore, which we've quite frankly never seen. Every time there has been, a lot of new industries that spring up so that, if you're working on farms before, you can move to a city and get a nice office job or whatever, the standard kind of urbanization thing we were taught growing up. And that totally makes sense. But with AI, the catch is that everything can be automated, especially if it's knowledge work. So honestly, I think the economy might move to things that require working with your hands. But anyway, hey, that's a totally different discussion. With trade jitters easing and investors brushing aside fears of a tech-fueled bubble, okay, so everyone's getting there 3 months later than we did because we've got our heads screwed on and we're not emotional children in these markets, so shout out to those of you that are subscribed to this channel getting these takes here. The market rebound showed that the buy-the-dip mentality remains firmly in place, which confirms that we're still in a bull market, ladies and gents. We're going to keep converting naysayers, we're going to keep converting bears until essentially everybody is bullish, and that is when you start to get big market crashes. So we're not there yet. That's just ahead of the unofficial start of the US earnings season with a barrage of reports from big banks Tuesday. Investors remain eager for exposure, and if this recovery holds, it will reinforce the idea that retail investors can't be easily shaken, and another reminder that buying the dip continues to work. Risk appetite increased after Trump's administration signaled openness to a deal with China to quell fresh trade tensions, while China's Ministry of Commerce urged further negotiations to resolve outstanding issues. Standard stuff, ladies and gents. Everything looking pretty much like business as usual here, and business as usual means the bull market gets back on track, ladies and gents, which is absolutely fantastic. Now, before I continue on with this article, I do want to talk to you about some of the worst case scenarios here. Now, I don't really see it happening. I mean, when you get a big shakeout like this followed by a recovery, that really sends a very, very clear message. But let's just say, I don't know, for whatever reason, it doesn't end up working out. China starts, blowing their horn again, or Trump starts saying stuff that spooks the market again, whatever the case may be. If the markets do end up dropping, then this essentially turns into a recovery that might last, let's say, a few days, maybe a week, followed by, again, this is going to be your next potential drop zone for the S&P 500, somewhere into the high 6400s or the 6500 area, because that's the kind of next logical support zone. I mean, we can see that based on some of the resistance that the S&P 500 managed to find here when it was first setting its all-time highs in this range. But we can see it a lot more clearly if we just zoom out even further. This is the only support level that the S&P 500 has, basically until probably like 6,400, 6,350, somewhere around here. And then again, down here at 6,100. And that's going to be the real kind of retracement kind of bottom line that I see for the S&P 500. I really don't think this is happening anymore, but I still have to talk about it because, as we pointed out on yesterday's live stream, the job of a trader, the job of an investor is really to kind of analyze all perspectives here. It's to look at all different sides of how this could work out, even the sides that you don't think are super likely or the sides that you don't want to happen, just so that you kind of know what's going to happen if it does take place. One of the worst things to be as a trader is caught off guard, because it means that essentially your risk management, your planning is not good. And if you don't have those things locked down, then you will lose most or all of your money within a period of time in these markets. It's pretty much near certainty from what I've seen doing this over 8 years. So I think that, we're not kind of fully out of the woods. We will be if we can start setting all-time highs, but we're still a solid few percentage points away. And that's why I don't want to, say, okay, we can kind of take a sigh of relief yet. No, not really. We've definitely had enough to start taking that sigh of relief, we could say, but not enough to kind of fully have that nice big exhale just yet. And I think that is going to come if we do start setting those all-time highs again. And it looks like the speculative markets are already leading us there. Let's take a look at some of the big tech stocks. Tesla doesn't give a shit anymore. Full recovery over there, which is absolutely fantastic. Nvidia is proving to us that it bounced off an old zone of resistance, very similar to Bitcoin zone of resistance that I just outlined at about 115, 116. It looks like Nvidia has just bounced off that level as well and is regaining its market structure here, which could imply further uptrends to come. So, as far as kind of making this bad, essentially, you'd have to sweep these lows. And, if NVIDIA were to sweep this low, which is now probably like a significant portion of the S&P 500, or it's NASDAQ, my bad, significant portion of NASDAQ, if it does start sweeping lows like this, then obviously we might have to expect further downside. But for now, they've recovered back into bullish stances. Everything has. Across the board, crypto has, stocks have, gold has as well again. So it's just everything's back to pump season right now, which is absolutely fantastic. And that's why I'm optimistic about this level breaking. That's why I think this level could break, and if the level does break, then our next resistance is going to be up here at about $120,000. It's a good level. I like this level of resistance. I don't think it's going to be too much of a problem for Bitcoin. Like I said, the fact that we're consolidating under resistance right now gives us a really good sign that we might be able to break it relatively easily. Maybe there is a small rejection, but I don't think it's going to be much crazier than that. And if we do get that continuation to the upside here, then again, melting through resistance shouldn't be too much of a problem for Bitcoin either. And again, I think that's all going to be depending on the S&P 500, but if we do continue to see follow through right here, that's going to be fantastic. I do have the futures chart right here as well, which I never really used to use, but it does imply further upward movement incoming for the S&P 500, which I think is pretty damn realistic overall. So I'm definitely liking the look of all of that as well. I really think that at this stage, it's not technicals that can forecast something going wrong for us, just like it wasn't before the dump happened on Friday either. The technicals weren't really there. The over leverage was in crypto, but you don't know when you're going to get hit with that long squeeze, right? Like that can come at any time. It happened to come, like I said, off the back of Trump's news, but I think it would have been anything. If it was India banning Bitcoin for the 200th time, or China banning Bitcoin for the 200th time, or Russia, or even America saying something like, I don't know, bad taxes on crypto, any of those things, I think, would have kind of set these crypto markets in disarray. There's a million things that can go wrong, and we got to keep that in mind because, like I said, we're not fully out of those woods just yet. But again, if you flip the narrative and you're like, okay, well, what do the bears want to see? I mean, it's a good start for bears, honestly. One of the best things that could happen for bears is that the market musters up enough strength to get up here and then just sees a massive rejection and drops itself below 107. That would be really strong for bears. That would really validate their ideas. And that's why I think that if we do get a rejection off this level, I don't want to see it kind of coming much lower than 115, 114. If we do start dipping below kind of 114, I am going to have to start looking at the, the low $100,000 range, just because I think that this market is going to reach, a potentially very scared place once again. I think that can happen pretty quickly at this stage. So we'll just have to keep an eye on that and see how that continues to play out. But let's bring it back to the article here. So sentiment. Sentiment was also buoyed by Trump's visit to the Middle East to celebrate a deal halting the war in Gaza and securing the release of prisoners held by Hamas. Trump said food and aid has begun to flow into Gaza, which has been devastated by the conflict. Treasury futures edged mildly lower with the U.S. bond market closed. So we are seeing a kind of de-risking in the very, very safe, or I guess I could say an increase of risk with money coming out of the very, very safest places here, which is great. Again, a very, very strong move, implying here that investors are ready to start taking on a little bit more risk. Wall Street's biggest banks are poised for another strong quarter, buoyed by resilient trading desks and a rebound in deal activity. Bank stocks have surged in recent weeks on optimism that a milder regulatory environment under the Trump administration would jumpstart corporate deal-making and boost advisory revenue. A record-setting surge in U.S. stocks has traders approaching the start of corporate earnings season with little patience for companies that don't meet the bar. Investors will also be looking for reassurance on a range of potentially thorny issues, from the durability of AI spending to how elevated tariffs are impacting companies. These tariffs are going to have to start coming down eventually. And I think when they do, it's just another thing that's locked and loaded, ready to go to send these markets higher. If tariffs do start coming down, which I do see them coming down in the next kind of 6 months to 1 year, if that happens inside of a bullish environment, I think it's just going to add so much gasoline to the fire that's already raging right now in these markets, which I think is so, so exciting. This earnings season is important. Actually, we're going to skip this. Meantime, equity analyst sentiment toward corporate profits is losing momentum at a time when U.S. stocks are trading near record highs. This is that whole concern that essentially companies are not making enough profit to justify their stock valuations. The only answer I can say to this is that, yeah, that's definitely going to be concerning on some level, but it also fails to recognize what these markets try to do, which is that they try to get ahead of the curve. And so, all these markets, they're forward thinking, right? They're looking at where money might go in the future. And so if you can see that, for example, Uber is going to be making a lot of money in the future, even if it's not making that money yet, you are going to want to invest in it. That's how investments work. So this is the problem with reading kind of news articles, is that I don't know what it is with authors that write these things. It could be that they literally just don't know what they're saying, and they just kind of, I don't know, have to conform to a certain kind of rigid set of guidelines for making articles for a company like Bloomberg. Or I don't know, it could be that, they do know about it and whatever, it's just not relevant. But whatever the case is, it's clearly not the full story, because it does miss out on arguably the most important kind of fact here, which is simply that, these markets are going to try and kind of, the money is going to try and flow where, it looks like companies could be performing pretty well. So, what, we're gonna leave most of this here. I think that, we kind of get the picture of what we're looking at. I think the markets are looking good. I think the fact that Bitcoin dominance is down shows us so much optimism in the market. The fact that hasn't been fully reflected on Bitcoin yet is honestly the least of my concerns, because if we're seeing that money go into altcoins, it's actually, I think, a better sign for these markets. I think it implies that there's even more investor confidence, and that's why money is flowing back into altcoins pretty quickly. So, ladies and gents, I'm happy with what I'm seeing. I definitely think there are a few risks here, and we're going to continue to monitor them. And if we do start seeing breakouts, then we'll be live for that as well. So make sure you are subscribed to catch that content. It's been a great one. Hope you've enjoyed this one. You know what to do. Smash up those likes, subscribe, click the bell, do all that good stuff, and we will see you all in the next video. Cheers.